Emerging market economies have been put through the ringer on a number of occasions over the last decade, and by and large, they've emerged remarkably unscathed. And they survived the financial crisis without any late 90s type of excitement, as per the Asian financial crisis of that era. They survived the taper tantrum of a few years ago. They've been seemingly surviving some of the recent volatility and the increase in yields. And so I think the logical conclusion here is they seem to be fairly resilient. And so for now, at least, it seems to me they can continue to grow fairly well. When we look at them in a broader sense, we recognize a number have delivered useful structural reforms, which are the sorts of things that can keep them on a good track for quite some time going forward. And so that's an optimistic thought, I think. I would recognize that when the global economy is strong, and that happens to be the case right now, emerging markets are the type of economies and markets that will outperform during that period. So I can't promise that's the story forever, but certainly they thrive in the present environment. And we do think from a valuation perspective that emerging market equities in particular are cheap. And so it is, I think, overall a positive backdrop. I should say, of course, the biggest EM economy by far is China. We are looking for China to slow. So there's perhaps an exception to some of the things I just said, not because they're not delivering reforms. They are, and actually fairly good reforms in many cases. They're actually set to slow for what I think are actually quite good reasons, mainly because they've decided to tackle their debt excesses. And so they're going to de-risk, and they are de-risking in a very healthy way, and it does inevitably result in a bit less growth. And to me, that's a trade I'm perfectly happy to make.